So in a recent video, I went really in depth into what price to earnings ratio is all about. PE value, such an important metric when doing fundamental analysis. However, we saw that some companies, they don't have a PE. It just has a dash or it's not even listed. Why? Because they're not yet profitable. This is the case for a lot of the growth stocks, a lot of the stocks that you guys see on Reddit. Why is that? Because they are not yet profitable. A lot of companies, they start out with just growing their revenue. They have very high expenses, and it takes years for them to become profitable. And so this is important to keep in mind because you cannot use a PE metric on a company that's not profitable. So what do? You use something called price to sales ratio. It's usually P/S. And the way that's calculated is you take the market cap of a company and you divide that by total sales. What do I mean by sales? Well, it's usually revenue over the past 12 months if we're talking about trailing PS. Remember, just the same as PE, PS can be a trailing figure or a forward PS. Forward PS is basically with forecasts. So you're using revenue forecasts in order to calculate it, whereas regular PS or trailing PS, and we'll look at an example later where it says TTM, which means trailing 12 months. So you take that, and that's the figure that you use in order to calculate PS. Now, just like PE, the lower the number, the better. So in a simple sentence, what does price sales tell us? Well, it tells us how much an investor is willing to pay for every dollar a company brings in sales. And this is very crucial and important when valuing growth stocks. Now, obviously, this should be used with other metrics, not just PS alone. But the reason I personally really like it is because I'm always skeptical of accountants. PS is great because it's taking revenue into account, not profits. Remember, profits takes revenue and expenses into account. And there are ways to kind of, if not cook the books, simmer the books a little bit so that it looks a certain way. And so there's plenty ways to manipulate earnings. However, revenue, sales, that's very difficult to manipulate. Revenue is revenue. It has to go on the books. Unless the accounting team is just complete crooks, they have to report it. Whereas earnings, remember, accountants, they abide by generally accepted accounting principles, which is funny, generally accepted. It leaves the room for finagling, for a little bit of mathematical jujitsu as far as how you want to portray the accounting books. And so it's important to take that into account. Now, however, there are some downsides to price over sales. First of all, it doesn't take debt into account. It doesn't tell you if a business will ever be profitable as well. Because remember, you can be bringing in colossal amounts of revenue, but if your expenses are growing, that's really bad. It also doesn't tell you if you can pay off the debt. Maybe your liabilities are so high that you won't be able to pay off your debt and there can be a catastrophe coming up. And that's why you shouldn't just use one metric when trying to value a company. Remember, a company can be really focused on growing aggressively, bringing in tremendous amounts of revenue. But the question is, at what cost? And this is why expenses and debt, it's important to look at, whereas the PS ratio, it doesn't take that into account. So always make sure to use the PS in conjunction with other metrics. Now let's hop behind the screen and take a look at the most easiest resource where you can see price over sales ratios and you don't even need to set up an account. If you have an internet connection, this is accessible for everyone, and this is what I personally use. Okay guys, we're gonna go old school. We're gonna go to finance.yahoo.com. Over here, you simply input the ticker. So let's say Intel. So I go to Intel, it's INTC. You click on that. So any company, you can do this for any company you wish, and then click on statistics. Once you click on statistics, you will see right here, it will say price over sales in parentheses TTM. This means trailing 12 months. Remember, we talked about there could be forward PS. This is just regular PS, which is trailing PS. And you could see that currently it is 2.61. And if you're curious what they mean by current, just hover over and they tell you it's as of the date, November 29th. So Intel is 2.61. Let's go take a look at a rival, AMD. and let's see what their price over sales ratio is. And if we take a look here, we can see that their price to sales ratio is 13.35, much higher than what Intel was. However, this is understandable because if you take a look, you can also see their PE is much higher than Intel is. And this can suggest that Intel is being valued really low. Now, why are people doing that? Well, because AMD, they feel it's got better chips. They're expanding like wildfire. Them and Nvidia are going to be taken over. Me personally, I feel that Intel is a huge underdog. I'm going to make a separate video on why I made a huge investment as of late on Intel and why I think it'll pay off big time in the long term. Now, just for giggles, let's take a look at AMC's price to sales ratio. Remember, AMC, it's not a profitable company right now. So if we go take a look at the statistics, you will see that there's nothing listed for trailing PE or forward PE. However, if we take a look at price to sales, you will see they have 9.39. Now, generally speaking, and this is important, when using price to sales, you always want to compare it in the same industry, apples to apples. You don't want to compare apples to oranges. And also, just a general rule, if it's under 1, if PS is under 1, that's an excellent price to sales ratio, just generally speaking. Anything below 3, maybe 1 to 3 is considered good. Below 1, it's considered excellent, and anything above 3 you should kind of watch out for and figure out why the PS ratio is trading at such a high multiple at that time. I hope this video cleared up price to sales for you guys. Feel free to watch it a few times, share with your friends, comment, like, subscribe. If I helped you out, help me out with some engagement, and I'll see you guys in the next video.